Welcome everyone to HueFin News. Today is March 12, 2019. This is the home of the 2-minute price prediction as well as giving all the news according to the charts. Now for today, we're going to talk about Aurora Cannabis and quick trying to compare it to Amazon. This was an article that was posted today from the Motley Fool. We thought that we'd go ahead and show you all some of the pertinent things this article was pointing out regarding the cannabis industry as a whole in its infancy stage and how it does not correlate with Amazon. And as always, once we complete this video, make sure that you all go ahead and give us your comments, your opinion as to what this article is trying to state, and do you believe in it or do you don't? So before we get started in that analysis, because you know our mode of operation is that we strictly focus on the price chart. We don't care about articles. Only thing we worry about is to make sure that what they're trying to state actually is being seen on the price chart, and you can do that by using language analysis. So if this is your first time here to this video, make sure that you all go ahead and like and share this video. If you do like the video content as well, make sure that you become a subscriber of this channel, because we are giving you all the news according to the charts before the market actually moves in that direction. So now let's look at this article, and before I do, I want you all to look at this price chart right here on the right side of this chart. Now this is a price chart for Aurora Cannabis on the daily time frame, and I want you all to see all the way back in 2016 where Aurora Cannabis was trading at. Right here on the 3rd of June 2016, Aurora Cannabis was trading at 38 cents. So considering where it's trading at today at around $8, $7.90, that has already seen a substantial increase in price. So ask yourself the question, can this really be an Amazon? Should we even be comparing cannabis companies to Amazon? So keep that in mind. So now let's get started in this article. It was written by Sean Williams. He is the contributor of the cannabis sector for the Motley Fool, and he titled this article, "Please Stop Comparing Marijuana Stocks to Amazon." Right now, there's arguably no hotter industry on the planet than cannabis, and it's been reflected in the valuations of nearly all marijuana stocks. Since the year began, well over a dozen of the most popular pot stocks are up more than 50%. He's talking about Canopy Growth, Afria, Aurora Cannabis, Tilray. All of these companies are well up more than 50% from where there's trading. Now when you look at the industry as a whole, it provides evidence as to why cannabis stocks seems to be unstoppable. Canada was the first nation to legalize marijuana. The United States has been given the green light for medical marijuana in certain states, and Wall Street continues to show its euphoria or its interest in these companies. So those are three things as to why cannabis companies are getting so much excitement and so much play in the media lately. And according to a report right here from ArtView Market Research and BDS Analytics, the global cannabis industry generated $12.2 billion in sales just last year in 2018. Now there is an investment bank right here, Cohen Group. They foresee the cannabis industry growing all the way up there to $75 billion by 2030. Almost 11 years. So Jefferies is another investment bank. They see an outside opportunity, like an outlier, seeing that the cannabis industry can top out at $130 billion annually. $130 billion from where we're trading now is substantial, but once you look at the market size of where Amazon is, the retail industry, it pales in comparison. So keep that in mind too as well. So it's these lofty forecasts along with triple-digit sales growth that has so many people interested in these cannabis companies. Now, no, your pot stock isn't the next Amazon. This is how he titles the next section of this article. With the exception of a very small handful of marijuana stocks, a handful of companies are able to make money. Everyone else is losing money, and in some cases a lot of money. The ugly income statements aren't stopping marijuana stock investors, because we've supposedly seen this scenario play out before with Amazon. See, when Amazon first started out, they lost plenty amounts of money in the very beginning, in its infancy stage. They took a lot of the cash flow that it was bringing into the business and reinvested it in the initial term in order to recoup profits in the long term. Okay, so that's what he's talking about right here, where Amazon lost copious amount of money in the late 1990s and throughout the 2000s as it built itself into an e-commerce giant. So now the question is, which one of these cannabis companies will be able to do that? Which one will be able to become a cannabis commerce giant in the future? It continually reinvested the majority of its operating cash flow back into the business in order to emphasize long-term growth over the short-term profits. And as the results show, it did quite well for itself. Then he brings up Aurora Cannabis. Through the first 6 months of fiscal year 2019, Aurora Cannabis has lost 192 million Canadian dollars on an operating basis. But because the company has been on an acquisition binge for more than a year now, is vaulted into the top spot in terms of projected peak annual production, meaning that they should be one of the companies to produce most of the cannabis in the sector. Yours truly estimates that, talking about Sean Williams, estimates that Aurora Cannabis can produce 700 kilos annually at its peak. Thus, the company's lack of profits and its immense dilution are moot points, because Amazon succeeded by reinvesting in itself. And so can Aurora, right? You would think so. But the fact of the matter is that Amazon's growth story is nothing, absolutely nothing, he emphasizes it, like what's going on in the cannabis industry. And comparing marijuana stocks like Aurora Cannabis or any other prominent name for that matter to Amazon has got to stop. He's telling everyone, you got to stop comparing these cannabis companies to Amazon. And now he's going to break down why he says that. The first one, innovation versus regulation. Now, automatically you can tell that the innovation portion is Amazon, the regulation portion is the cannabis industry. To begin with, Amazon was creating something completely new. Prior to the mid-1990s, there was no broad-based internet access of e-commerce. There wasn't no business being done on the internet. This was an exceptional fluid space that had avenues that would take time to discover. Even 25 years later, talk about now, we're still witnessing connectivity innovation that's consistently or constantly transforming the internet, cloud computing, and the face of e-commerce. Now, when you compare it to the cannabis industry, marijuana has been around for a very long time, albeit it wasn't legal. There's not much in the way of game-changing innovation that they can do. It's merely a tight walk between the regulators and retailers of figuring out where the sweet spot exists with regard to taxing legal cannabis in order to drive consumers from the black market into legal channels. That's it. Because once cannabis becomes legalized, do you not realize that everyone is going to be jumping on the bandwagon, which as well will increase competition for these forerunners in the cannabis industry? Next one, there's a massive gap in market size. This is what I was talking about earlier. Marijuana stock investors who love leaning on the Amazon comparison are also overlooking a huge gap in comparable market size. Even assuming Jeffrey's extremely lofty estimate of $130 billion in annual sales is correct, keep in mind that Amazon is part of a $6 trillion U.S. retail sales industry. $6 trillion. While if you go up there and look at Jeffrey's, their expectation was $130 billion at its peak. That's at its peak. It's not going to go no higher than that. That's what they're forecasting. But Amazon is a part of $6 trillion retail industry. So that doesn't even compare in that perspective. And this doesn't even factor in this cloud computing service that Amazon has. To summarize, Amazon currently operates in an addressable market of more than 6.2 trillion, not even counting their smaller sales channels, and marijuana if they can get to $130 billion in sales. That's the climax, that's the peak, that's the top. So already that doesn't even compare to the market as a whole for retail and the cannabis industry. The third point is that most pot stocks don't have multiple sales channels like Amazon has. Comparing both of these two industries, cannabis and the retail sector or e-commerce, you understand that it ignores the fact that Amazon has numerous channels of revenue. Amazon makes money off of its e-commerce with its cloud computing services. It has a grocery chain, Whole Foods subsidiary. It sells its Prime service, and it also has ad services and co-branded credit cards. And not only that, there might even be a mixture of Amazon creating their own transportation or logistical hub to where they're going to ship their own products or things that other people buy and sell from their website. So consider that as well. Last one. Initial winners may not have the staying power, i.e. Canopy Growth, Afria, Aurora Cannabis, Tilray. All of these forerunners may not have the ability to withstand the storm of more competition coming through the market. The rise of internet e-commerce reminds us that initial leaders aren't guaranteed to stay there forever. Remember, he goes back into the technological age of the internet. When Netscape was the preferred internet browser, Yahoo was in control of the internet search space, now it's Google, and eBay was at one time the e-commerce destination of choice, and now that's Amazon. Change is commonplace within fast-growing industries, and there's little guarantee that a company like Aurora Cannabis, which looks to be the leader now, is going to remain near the top in the long term. Long story short, this is what he ends the article with. Just because Wall Street tolerated ongoing losses for Amazon doesn't mean they'll tolerate them for very long from the pot industry. Caveat emptor literally means buyers beware. So he's telling the investors who are looking at the cannabis industry to be aware of what they are doing when they are trying to invest in these particular stocks. So now, what do you guys think about that article? Do you think he has pretty good points? Or do you think he's just trying to persuade you into not buying any of these cannabis companies? But let's take a look at the price chart, because if you guys can remember, I went ahead and told you that around 2016, the market for Aurora Cannabis was trading around 38 cents. Moving it closer to today's date, it's all the way up there around $8. So that is already around full capacity. I mean, how high do you think Aurora Cannabis will move once legalization comes on board, once they hit mass production or full production of their cannabis products? How high do you think this particular market will run? Take a look at it on the daily time frame. You guys can remember the last time we did our video for Aurora Cannabis, we understood that this $8.25 price, this line that is drawn here, has been plaguing Aurora Cannabis from breaking up to the upside. And currently we're still getting that same particular type of notion. Today, matter of fact, the market in Aurora Cannabis continues to show us that there are some sellers coming in around that $8.20 price. That is not a positive thing to see in the market for Aurora Cannabis. And until we're able to break above this resistance line in this space for Aurora Cannabis, the market will continue to hold consolidation and move lower. That's a very easy analysis. Don't expect anything to come out of this particular stock until it breaks above our resistance line. And currently, looking here on the weekly price chart, we're still getting indications of weakness coming to the market. So that consolidational trading as well as movement to the downside is still in play. Looking at it on the 4-hour bars, you can still tell here that the weakness is still coming into the market. The current move is still one of weakness. In order for us to maintain the prospect of us breaking above $8.20 in Aurora Cannabis, this stock has to trade above this line. Okay, I am going to tell you that right now. If you see this market break below this line that is just drawn on this chart, it will not be moving higher, and we will be moving to the downside within this consolidational trading range, right in between $8.20, possibly $7.40, even all the way down here to our ascension line in this particular space. Okay, so overall the market in Aurora Cannabis is not overly that strong. We're still running across a very strong resistance area, telling us that the market is selling its shares around that price. Okay, so until you see Aurora Cannabis trade above this resistance line, we will continue to consolidate and even move to the downside. Okay, so just like our previous analysis, we're still expecting Aurora Cannabis to move to the downside, or at best hold consolidational trading until it is able to close above that resistance line that is traded on this price chart. So there you go. Give us your thoughts about what you think the ending result will be for Aurora Cannabis. Do you think it needs to be compared like Amazon? Or do you think Sean Williams in his article has pointed out some very good points relating to the different economic situation that Amazon was in versus what these new cannabis industries are trying to do? Let us know with a comment in the comment section of this video. If you guys appreciate the video, go ahead and like and share it. Make sure you become a subscriber as well. Hit that bell notification so you all become notified when we upload this particular type of content. We do appreciate you all taking out the opportunity to watch this video. Make sure you all maintain your profitability, and I will talk to you all later.